At Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily. With operations spanning more than 20 hectares, every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met, from permits to paychecks, ensuring legal, fair, and quota compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world
momentum across our operations and market visibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket, and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation, and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
rest, and go.
SRO. SRO, so you have a range clear launch. And CDR.
Half of the KSC processing and launch.
At Ines Group Berhad, we have
Good evening, investors. Welcome back with me, Madhavi, on KleverStock, serving you the latest updates for the closing bell this evening. Kicking it off with the evening update from our local bourse, Bursa Malaysia maintained its strong upward momentum through mid-afternoon, driven by steady buying in heavyweight blue chips. By 3 p.m., the benchmark FBM KSCI jumped 13.73 points to 1,712.70, up from its previous close of 1,698.44. However, this large cap rally masked a weaker, broader market as declining stocks outnumbered gainers 5-6-3 to 4-3 on secondary reports. Total market turnover reached 2.40 billion units, valued at 1.47 billion ringgit. The index was anchored by strong gains from industrial and financial leaders, with Petronas Chemicals climbing 39 cent to 4 ringgit 74 cent and pressed metal aluminium adding 21 cent to 8 ringgit 6 cent. In the banking sector, Public Bank rose 7 cent to 4 ringgit 99 cent, while Maybank finished flat at 10 ringgit 94 cent. Bucking the positive trend among heavyweights, healthcare giant IHH Healthcare slipped 3 cent to 8 ringgit 44 cent. On the active board, property firm Tanco Holdings rose 4.5 cent to 28.5 cent, while offshore drilling outfit Valesto Energy dipped 1.5 cent to 27 cent. Other notable corporate gainers including Petronas Gas, which climbed 40 cent to 17 ringgit 86 cent, and Batu Kawan up 30 cent to 21 ringgit 70 cent. Conversely, consumer stock Nestle Malaysia led the decliners by dropping 64 cent to 91 ringgit 8 cent, followed by tech-focused Malaysian Pacific Industries, which gave up 18 cent to 44 ringgit 12 cent. The surge in top-tier components lifted major sub-indices, which the FBM index increasing 63.70 points to 12,617.66. Sector tracking showed a clear lead by financial networks, pushing the financial services index up 100.52 points to 20,120.60. Meanwhile, the mid-cap and small enterprise boards buckled under profit-taking pressure, causing the FBM 70 index to slide 42.59 points and the FBM ACE index to drop 30.86 points. Now for some local news developments. Tanco Holdings Berhad has advanced plans for its proposed smart AI container port in Port Dickson, Negeri Sembilan, by securing two separate agreements focused on strategic international cooperation and the supply of vital construction materials. In a regulatory filing with Bursa Malaysia, the company announced that its 79% owned subsidiary, Mid-Port Holdings Sendirian Berhad, has signed a memorandum of understanding with China's SPJ Port Group Co. Limited to explore mutual opportunities for the port project and its corresponding fundraising activities. Under the terms of the 6-month agreement, both entities will evaluate the potential non-exclusive participation for the Chinese port group in the Malaysian development. The collaboration connects the local firm with a massive global logistics player. SPJ Qingdao Port Group operates the Port of Qingdao which consistently ranks among the top 10 busiest maritime gateways in the world and offers specialized capabilities in port management, container logistics, warehousing, and supply chain solutions. In a parallel market announcement, Tanco stated that its indirect wholly owned unit, Stanco Supply Sdn Bhd, has finalized a memorandum of agreement with Halaman Mantap Sdn Bhd to secure up to 4 million tons of armor, rocks designated for critical reclamation works at the port Dixon site. The agreement gives the participating parties a 4-month window to finalize technical specifications, precise volume requirements, commercial pricing, and delivery schedules before transitioning into definitive supply contracts. According to the stock exchange filing, the primary objective of the pact is to facilitate the direct supply of our rock necessary for the reclamation phases of the Mid-Ports project. Company management clarified that neither of the international cooperation memorandum nor the material supply agreement is projected to cause immediate shifts in Tanco's underlying financial metrics. The group noted that the preliminary agreements and the arrangements are not expected to have a material impact on its official share capital, shareholders' equity, net assets per share, current gearing ratios, or the earnings per share for the fiscal period. Now continuing with some economic news. The Roundup Institute has proposed a flexible, data-driven housing framework to replace rigid regulations ahead of the National Housing Policy 3.0. The think tank argues that current housing quotas, cross-subsidies, and Bumiputra release mechanisms are outdated and fail to match Malaysia's evolving demographics and household incomes. Roundup Institute Chairman Dato Jeffrey Ng Tiong Lip explained that structural shifts have left traditional rules obsolete. Ng said past policies did help many people to own homes, but Malaysia has advanced and changed. Because of these changes, rigid and outdated housing rules no longer fit the reality on the ground. This policy mismatch has triggered a severe oversupply. As of the first quarter of 2026, Malaysia has 32,800 completed unsold homes worth 16.37 billion ringgit. Surprisingly, nearly 47% of these empty units are priced under 300,000 ringgit, proving that market failure stems from poor locations, bad transit connectivity, and strict financing rather than just high prices. Ng noted, if we have tens of thousands of completed homes sitting empty while Malaysians cannot find affordable housing, maybe our challenge isn't simply about building enough affordable homes. To fix this, the Institute wants the government to unify the fragmented data held across different state agencies. By combining data on incomes, public transport, and demographics, planners could use advanced tools like artificial intelligence to accurately predict local demand before even constructing begins. Ng concluded, in simple terms, if we want Malaysians of all income levels to keep owning homes, our housing policies must follow real needs and real data, not just old rules and old regulations. And we're now moving on to the corporate front. Sinkang Logistics Berhad has signed a memorandum of understanding to explore a strategic partnership with the Airport Authority Hong Kong, aiming to strengthen international air freight networks and accelerate cargo development. The two entities intend to explore various opportunities to create multi-modal logistics frameworks, fortify global shipping connections, and maximize day-to-day operational productivity by combining their industrial strengths and resource networks. According to the Malaysian air freight specialist, the cross-border alliance is designed to create a structured framework for both businesses to uncover trade initiatives and enhance regional supply chain integration while adapting to the changing dynamics of global trade. The partnership links the domestic company with a highly influential regional partner as the statutory body manages the operation and long-term expansion of Hong Kong International Airport, which holds a reputation as one of the world's most critical and high-volume air freight gateways. Sin Kung Logistics Group Managing Director and CEO Alan Ong stated in an official release, the MOU provides a platform for us to work closely with AAHK to pursue opportunities that support regional air cargo development and strengthen connectivity between key cargo gateways. Emphasizing the broader economic benefits of the tie-up, Ong noted that as trade flows continue to grow and supply chains become increasingly interconnected, we believe closer collaboration will enable both parties to identify initiatives that create greater value for customers while supporting the continued growth of cross-border trade. Rounding off today's closing bell with commodities update. Gold prices climbed on Tuesday after sliding to a two-week low earlier in the session as investors paused ahead of critical U.S. inflation data, while worsening geopolitical tensions in the Middle East drove oil prices higher and stoking fears of extended global inflation. Spot gold advanced 0.8% to trade at $4,031.43 per ounce, staging a recovery from a sharp sell-off in the previous session where the non-yielding asset shed roughly 3% of its value. Concurrently, U.S. gold futures for August delivery matched the trend, gaining 0.8% to sit at $4,037.80. The volatile market action highlights a tug of war for the previous metal, while bullion typically acts as a traditional safety net against inflation. The broader reality of rising interest rates often caps its upward momentum by steering capital toward interest-bearing alternatives like bonds. Market participants are keeping a close watch on upcoming macroeconomic catalysts, including the June Consumer Price Index print, the Producer Price Index report, and Federal Reserve Chair Kevin Warsh debut semi-annual congressional testimony. Ilbias Pivot said, head of Global Macro and Test Life, you have a situation where the markets probably don't want to commit. They have a big batch of event risk in front of them. There's of course, the Wash testimony and then the CPI print, so there's a lot of people to look at the addition of the headlines out of the Middle East. Monetary policy statements continue to influence investor sentiment following recent remarks from Fed Governor Christopher Waller, who noted the central bank might be forced to push policy rates higher in the near term if inflation rates consistently breach the 2% target. Financial markets have adjusted to this hawkish outlook, with rate futures indicating a 76% probability of a September rate hike up significantly from the 57% chance priced in just 1 week prior. The upward momentum spread across the wider metals desk as spot silver rose 0.9% to $58.17 per ounce, platinum crept up 0.3% to $1,610.13, and palladium jumped 1.9% to reach at $1,271.22. And that's a wrap for closing bell updates with me, Madhavi. Thank you, investors. We shall catch up in the next session soon. Goodbye.